Every realtor needs a solid mortgage lender, and for me, that person is Beth with CMG Home Loans. Listen in as she shares her story on why she got into the industry and how she balances it all with being a single mom. Beth, are you originally from Chattanooga?
No, I was actually born in Atlanta, but I grew up in Orlando, Florida. So I feel like I'm still a Florida girl, even though I came here to Chattanooga in 1993, and I've been here ever since.
What brought you up here?
I went to college here. I went to Lee University down in Cleveland, not too far. And then I thought I would move back to Atlanta because while I was in college, my family moved back to Atlanta. So that was my goal the entire time. But then ended up getting my very first lending job here in the Chattanooga area and ended up staying.
Okay, that was going to be my next question. Is how did you get into the mortgage industry?
I ended up getting into lending because I was a business major when I was at Lee, and they had this really cool program where they sent out resumes for all the business majors to the local area. And so somebody called me from a company called Norwest Financial that was in Cleveland, and the manager was actually an alumni of Lee as well. So it was kind of like that small community, small college feel. And you had to be a college graduate in order to become a loan officer there. And so I went to 3 different interviews and ended up getting the job and has been in lending ever since.
And what year was that?
I'm dating myself now. It was 1996.
Okay.
1996, but it was a finance company. So while I did mortgages, we also did car loans and personal loans and furniture financing, and back then was mostly doing second mortgages for like consolidation loans and things like that. But I did so well on the real estate side of it that I then hopped about 2 years in, I think, from a financial company to doing straight mortgages and working for a mortgage company.
Okay. And now you're with CMG.
Yes, CMG Home Loans.
Okay. And so you have 4 children, ranging from 13 to 20s, correct?
13 to, he'll be 25 next month.
Okay.
So
what would you say are your strengths when it comes to working in the mortgage industry and working while raising your family?
Well, I think I'm a single mom. So with being a single mom, I feel like I've been through a lot of life, and we've already aged myself. I'm almost 50. And so with the lending side, it is important, of course, to know your craft and to know the guidelines, which are always changing. But one thing I try to do is really not look at people as a transaction, but really listen and understand their situation. Because like being a single mom, for example, I love working with other single moms because there's nothing like helping someone who's been through a hard time or raising children on their own and getting them to the closing table to where they can buy their own house for them and their children. Yeah. So I really try to communicate, but also find a way to relate to my buyers. If it's anything like I was telling you about with the single mom, a first-time home buyer, somebody trying to downsize, empty nesters, because even though it's not life and death, it's the biggest purchase they usually make in their life, and buying a house is a very emotional purchase because the second they find that house and fall in love with it, they're already picturing where their Christmas tree is going to go. Imagine making memories there. And so, I get that. I get that's more than just a transaction. So I really just try to relate, communicate, and hold their hand and make them feel comfortable every step of the way until we get to the closing table.
I like that.
Yep. Well, I bought a house a couple years ago, too, and I was a complete nervous wreck. And I've been doing this forever. Yeah. I mean, my manager was like, you need to chill out. It's kind of like the whole doctor thing makes the worst patient. Yeah. But it can end up being a mind freak.
It's stressful.
Yeah, it's very stressful, and it's very emotional. It's not just like going out and buying a pair of shoes or something.
And it's not immediate. You know, you go under contract, and there's a whole list of things that could go wrong, and sometimes things come up, and so you don't get the house immediately. It's a process to get there.
Right.
So I think, it's stressful for sure.
Well, and I don't think most people who are buying a house, they don't realize that there are so many guidelines. I like to say that I'm kind of like your attorney when you go to court. You know, I'm technically not the one who's approving you. Now, it's my job as a loan officer to pre-approve you and understand the guidelines and take your application and the information you send and say, yes, you can buy a house. But ultimately, I'm the middleman between you and the underwriter, who is the final person to say, hey, you are clear to close. You can buy that. You can buy that house. Right. No, they're the good guys who are approving and helping us buy homes. But I mean, so a lot of times buyers don't realize all the different steps, all the different, understanding why we have to have multiple pay stubs or bank statements or why we have to verify certain things. But it's our goal as loan officers to get you into the house. I like to say it's kind of like going to the dentist. It's not always the most pleasant thing getting a mortgage, but we will get you there.
Yeah. All right. Well, opposite question. What would you say are your biggest challenges when it comes to working and maintaining your personal and family life?
Yeah. Well, like I mentioned before, I'm really big on communicating, and I'm one of those people that if someone messages me or texts me, it's hard for me not to answer them right away. And when being an agent, I mean, people call us nights, weekends.
All the time.
Yeah, all the time. We don't have your normal 9-to-5 jobs. And that's because people are working during the day. So many times the nights and the weekends when they can look at a house. So, but it's really hard for me if I do get that message or get an email not to right away, just answer it. And I know, like, when I pick up my daughter from school, she knows if I'm on the phone with a realtor, because the second she gets in the car, I'm like, it's a realtor, and it's like a trigger word now for my kids. And so kind of trying to set up boundaries and realizing, hey, it's okay if I wait 10 minutes or 30 minutes to answer this call. And so, and outside of that, being a single mom, I pretty much support my kids on my own, or the ones that are still in my home. I do have 2 adult children who are moved out. Thank you. And just, of course, that pressure of being able to provide for them by myself. But actually, it also motivates me because, being the sole breadwinner, it makes me probably a little bit of a hustler, just because it is all on me. I don't have that extra income or, a partner's income to fall back on. So, but I think with anybody in real estate is trying to find that balance of, you don't have to answer right away.
I get, like, time is of the essence, but sometimes you're like, it can wait, like you said, even 10 to 30 minutes, even an hour, usually, like, I won't ever miss a deadline for you. I will never miss a deadline, but it's okay to wait to call somebody back.
Right. And I usually tell people if it's the weekends, if I don't answer right away, I try to answer within the hour. The only time I really don't answer my phone is Sunday mornings if I'm at church. But even then, I have been known to step out.
I'm sure a lot of people go to church here. I'm sure a lot of them are in the same boat, but I'm sure you do get still some phone calls. So
I've actually had a realtor who goes to my church message me from the choir loft. And I looked down at my phone and I kind of looked at him
like, I know you're there.
And he was like, it's only the announcements. So, but you can do what you got to do.
Right. All right. What are your thoughts and predictions on where you think the real estate market will go this year? It's been all over the place. So, again, not to put you too much on the spot, but I'm just curious.
Yeah, I do think it's going to be better than it was last year. I think last year was a very challenging year. Our team as a whole had a good year, so we're very thankful for that. But could have definitely been better. Interest rates are not where we want them to be. Last year we did get into the 8s, which was kind of scary. Now, when I got into business, rates were in their 8s, but they have come down from there, and I believe they will continue to trickle down. They have been kind of like this right now. I don't think we're going to have any type of major drop like all of a sudden they're in the 2s and 3s again. But I do think we will get into the solid 6s and the solid 5s. And I also think a lot of people had sticker shock when rates went into the 7 and 8s. And now they're kind of like, well, it is what it is. It's
reality,
still, reality has set in. And we have seen, at least I know in our business, a lot more applications are coming in. A lot more people are buying. And if rates do end up going down into the 5s, I do think, especially here in the Chattanooga market, it's going to be like it was after COVID, where there's going to be multi-offer, houses are going to go up in price, we're not going to see seller concessions. So it's definitely a good time to buy, but I am starting to see a lot more people coming off the sidelines. So I think it's going to be a good year. A lot better than last year.
Yeah. Last year, I mean, again, for me, like, I feel like it was a pretty solid year, but I know the unknown was kind of scary for a lot of people.
Right.
But I think, I agree. I think if interest rates go to the 5s, and I'm already seeing multiple offers on certain properties that are, like, priced accordingly in certain areas. I'm already seeing multiple offers, and a little bit of competition. So it's definitely starting to pick up. Do you have any special loan programs happening now at CMG?
Well, the most popular program we have is not necessarily a lending program. It's more of a perk, if you will, which is our rate rebound program. Like we were talking about with interest rates, because they are higher than most people want them to be. Anybody who purchases a house with us, anytime in the next 5 years when rates go down, we will refinance you into that lower rate and waive all of our fees. We'll pay for your new appraisal, we'll pay for your tax cert, and we'll give $1,000 lender credit towards the title company fees.
Wow.
And what's cool about that, too, is not only can they do it anytime in the next 5 years, they can do it more than once as long as rates keep dropping.
Okay.
So it's a really cool program. Most lenders have something out there, but I don't know of anybody who has quite as much as CMG is as far as doing the appraisal, the lender credit, and the fees, but especially that we can continue to do it as rates keep dropping.
Okay. Are you still seeing a lot of like 2-1 buy downs? Can you explain the 2-1 buy down, I guess, in lender verbiage?
Sure. So the
I get asked about it a lot.
Right. So. Yeah. The 2-1 buy down is a great option for sellers who they want to offer that if they don't have any movement on their house or when it comes to negotiating seller concessions. And so, and correct me if I'm wrong, because I know this is your side of the business, but using even numbers, let's say somebody throws out a $300,000 offer and they want the seller to pay $8,500 in closing cost. Well, or up to 3%. Let's just say 3% in closing cost, which would be $9,000. Well, instead of them putting that towards the standard lender fees and title company fees and prepaids, they can apply that to a 2-1 buy down instead, or the seller can offer a 2-1 buy down. And what that means is if the rate is at 7%, let's just use an even one. That means the first year it will be at 5%.
Okay.
And then the next year it'll be at 6%. And then year 3 it goes back up to 7%, which is the base rate that we're actually locked at. And the way it works is that we take the difference between the 5% rate and the 7% rate and how much that is in payment. And then the 6% rate the next year and the 7%. And that's all charged at closing up front.
Okay.
And so if it costs, again, I'm just making up numbers. So if it's a difference of $6,000 in payments, then that $6,000 is charged up front on the closing disclosure.
Okay.
And then the seller pays for it. And so what it does, it allows you to, again, have a 5% rate your first year. And then the goal is, hopefully, if rates do go back down to the 5s before it even adjusts to 6 or 7% to refinance it using the rate rebound program. So you never get back up to 7%. I know, shameless plug. But what's neat is, if you pay a discount point on a loan, which is a discount point is the price of a rate. So if it's 1% on a $300,000 loan, you're paying $3,000. Well, if you refinance, that just goes away, even if you didn't recoup the cost of it. Well, with a 2-1 buy down, if you refinance after 8 months and let's say there's still $4,000 left of the buy down that was never spent, instead of losing that money, it just goes towards your principal balance.
Okay.
So you don't lose that money that the seller contributes to you.
Okay. So they don't take, I guess, with the seller credit going towards the buy down, does it get spread out throughout the year?
It's all just charged up front.
Okay.
And so with the difference, like for example, the difference between the 5% rate and the 7% rate is $200 a month, then that $2,400 is added at closing.
Got it.
So basically the savings on the rate is being paid for up front.
Okay.
But many times people refinance before it ever adjusts. Well, you've already paid for that savings. And so instead of losing it, it goes towards your principal balance. So your payoff will be minus whatever has not been used of that savings.
Okay, got you. Yeah, I get asked about a 2-1 buy down a lot, and it's a good.
It's a great great marketing tool, and it really comes down to what's more important to your buyer. Is it to have that 2-1 buy down, or is it to have your closing costs paid for, or having a lower monthly payment, or how much your cash to close is?
Yeah. All right.
Yep.
Well, what advice would you give to somebody in your similar shoes, let's say 15, 20 years ago, whenever you started out in the mortgage industry, specifically real estate mortgage? What advice would you give to a young woman in your similar situation?
Well, first, I would love for more young people to get into our industry. We need some more young people into our industry. But besides, of course, knowing your craft, I mean, we are constantly having to study guidelines because they're always changing. However, and this might seem the opposite, but I love this saying. I heard it once called ignorance on fire is better than knowledge on ice, which means don't just sit around and just study all day long. Because as lenders, we would never go out.
Right.
Go out there, get to know people, create a big network, create a database. Having a database is so important. And yeah, go out there and make sure you are meeting realtors, that you're meeting financial advisors, and that you are meeting people who, because pretty much everybody should want to buy a house, right? There's so many ways to market. So don't just sit around until you know everything. Just be proactive, because you're not going to really learn how to do a mortgage until you do one.
Right. That's how it is in real estate too. We kind of get thrown into the wolves a little bit. I mean, there's training. I started off with a small brokerage and I didn't have that. And so, and I started right after COVID. And so it was crazy market. And I was doing it part-time because I just had a baby. And I had my first listing and I had I didn't know how to use showing time yet because nobody showed me. And then, so I had hundreds of calls on my phone. And then I think we had 40 walkthroughs, and they're like, because it's after COVID, make sure they're not overlapping. And the agents would just tell me, yeah, I'm just going to go at this time. I'm going to go when they're there. And now I'm like, it's fine to have overlapping showings. It would have been fine at the time too. But I remember being like, they're not even listening. It says you can't have overlapping showings because that's what my broker said. And so it's kind of getting thrown to the wolves. But once you've done it a certain number of times, the education behind it is very important, and to keep up on, it's constantly changing. But until you do it, you don't really know how to do it.
Exactly. I mean, you could...
Which is funny. It's almost like a catch-22 in this business.
Well, it's like riding a bike. You can watch every video about riding a bike, but until you get on it and do it.
And fall off a couple times.
And I think that makes the difference between... Because I know last year with rates being higher, I think something... And this happened with realtors too, but I think this number might totally be wrong, but 80,000 loan officers didn't renew their license.
Wow. That's nationwide.
Yeah,
right?
nationwide, not in Chattanooga.
I'm like, there's 80,000 loan officers here?
No, nationwide, something like 80,000 loan officers didn't renew their applications, and so it's these times where you have to be out more. I mean, if you don't like sales, because really we're just salespeople who happen to do mortgages. So you have to be able to be comfortable talking to people.
Business.
It's definitely a people business, and you have to be comfortable having hard conversations.
Yeah, definitely. There was something I was going to ask that you brought up. Oh, so with all the changes happening, this is another on-the-spot question I thought of. So with the lawsuits going on with NAR, that's a big talk, I guess, in the real estate community. I kind of have my own plan. Owning my brokerage is kind of nice because I can set, okay, this is what we're going to do moving forward if this happens. I have a plan for what I'm going to do. Do you think anything will change in the lending world with commission changing and with the lawsuits? Because I see commission changing eventually. I don't think it's going to happen overnight, but it's definitely changing. I'm starting to notice it a little bit, which is fine. If you do enough business, you can make it work and set flat fees and things like that. Do you think, how do you think it will affect the lending mortgage industry?
I mean, if they, and correct me if I'm not talking about the right thing, but I know what I'm hearing is buyer's agents might not be paid the same.
So essentially, buyer's agency might go away, which a lot of agents would then probably not stay in the field. But I think there's a way, again, it goes back to hard conversations because, you have clients who maybe buy, let's say, an off-market property. You have to negotiate that commission up front anyway, and you have to figure out, well, who's paying for it because it's not on the market. And so if you have a plan, I feel like you're kind of set. But it's going to, I think, change who stays in this industry and kind of how they go about it. Because if you're not comfortable having those hard conversations, you're not going to get paid.
Right. And it can affect us because, of course, my bread and butter is buying agents. There's agents like you who do both sides, so, and I'm also trying to reach out more to listing agents as well because many listing agents will eventually become,
Right, they're going to get those buyers.
They're going to have buyers too. And then there's some listing agents I know that just do listings, period. And so it could affect a lot of loan officers if many of those buyer's agents that they work with, that they're not producing a lot, if they end up getting out of the business. So I think it could affect us maybe a little bit that way with who our referral partners are. But I mean, all you do is just keep hustling and keep networking.
You don't think they'll ever finance like commission into the loan that the buyer pays? I know it'd be really, really, really complicated to do. But
no, because right now we don't have any closing cost, and so it's going to affect loan amounts.
Sure.
If they do, because their closing costs end up having to be a lot more, and so we're still having to quote, ask the seller to pay for closing costs, which then could affect the sales price, then affect the loan amount.
Sure. And it's all snowballed. I mean, it depends on how the market goes.
Yeah, so all that could adjust it, because we know if the market ends up being like it was here after COVID, you're not going to get any seller concessions.
Sure.
Anyway, at least I bought a house after COVID. It was insane.
Oh, yeah. We had a listing from a flip, and we had people offering to, like, give us random things, gift cards to places.
Oh, yeah.
Drum lessons, I think.
Oh, my seller's still a beneficiary on my life insurance. I had 5 kids, but I gave them one. I mean, I think it was 6 houses. I mean, I had them written out before I even looked at them, just in case we wanted to.
It was nuts.
Appraisal
It was
gaps.
honestly a little exhausting, and that's when I feel like this panic to get a hold of your agent or your loan officer kind of started, because they're like, I need it now, kind of the mentality. And I know that's kind of just how society is now, but that's kind of where I saw it. And when I was like, oh, I have to set actual hours because I can't be answering my phone at all hours of the evening.
Yeah, that's one thing I'm working on too, is that when someone does call me on the weekend and it's the very first call and they want to do an application, I ask now, have you found a house? If they said, no, we're just in the very beginning, then I'm waiting until I'm in the office Monday before they pull the application.
You're like, you've got some time.
Yeah.
And same on my end, like if somebody wants to tour a house, I'm like, have you been pre-approved yet? Yeah. It's kind of like they go hand in hand, because if you go look at a $300,000 house and they're pre-approved for $200,000, you just wasted your time. So
right.
You just wasted a part of your weekend.
Yeah. I think it'll be interesting what happens as far as how many realtors stay in the game, how many get out. I think anything that happens in real estate with agents does eventually, fall into us as well.
Sure.
But it's definitely going to people are going to bring a lot more to closing when it comes down to that.
Yeah.
And it also might make the negotiating a little bit crazier too. So.
Yeah, and I mean, I really see the value in buyer's agencies, and even like on the listing side, I think it's going to affect how many people come to look at the houses, and it's definitely going to change, because if you're on both sides, it changes the whole negotiation process. I mean, if your client is the seller, you have their best interests in mind and at heart, and so to do both sides, not that it can't be done. I've done transactions on both sides, but you have to be careful.
Right.
Be careful what you say, and
and that's what I was thinking too, because the listing agent, they're hired on to represent the sellers.
Right.
So they're going to
always going to have their best interest.
Always look at the best interest. And then the buyer's agent is always going to have the buyer's best interest.
Right.
And it's not like it's this, usually 9 times out of 10.
Usually it's good.
Usually, knock on wood.
There's a few times where you're like, oh, I could have gone better. But usually it's like, we're all working towards the same goal. We're all going towards closing. But it does help having that buffer, because it is such a high emotional transaction, and it's stressful, and it's a big purchase for people. When they have an agent who's walking them along the way, especially a good agent, it is really helpful, because you can talk to them and then they can talk to their clients. You're not, I might be more direct than somebody might be with their clients. If I'm representing the seller, I might not be as like, I don't know, soft and gentle about it. Well, if they're not my clients and I don't know them, because again, it's a people industry. You get to know like people's families. People bring their kids to showings. You learn where they work. You learn what they like. I even try to figure out what they like so I can get a good closing gift for them. If you want to hit those little like
touch points.
Touch points, just so that you can kind of strengthen your relationship with them and keep it up in the future.
And I think that's going to put a lot of more stress on the realtors too, knowing that they're having to do both sides.
Yeah.
And because it's going to be like pressure on both ends. Like, because I have an agent now who she's on both sides of a deal, and it's we're going to get there, but it's still a very challenging, It
can be tricky, especially when it's not investors. Because most of the ones I've done, both sides, have been investment properties, and they're more matter of fact a lot of the time because there's less emotion there, and so it's a little bit easier because you can just copy and paste. But when you have somebody who this is their dream house, they're picturing their Christmas tree and their family and bringing babies home to it. It's like it's a lot more of an emotional toll if you're giving them bad news.
I love that you said Christmas tree. I always said if I was a realtor, I'd carry 3 things with me. I'd carry a Christmas tree with me,
a full size tree.
Oh yeah, well they have those ones now you can kind of open up. I don't know if you've seen them.
No,
yeah, that way people can picture where their Christmas tree is. I would bring a handrail. So if they end up going FHA, there's not a handrail. Just and then thirdly, just a coat, white paint. If I ever need to.
That's great. Those are I should be.
Those are the 3 things that I would be carrying if I was an agent, but I'm not. Nor do I want to be.
None of those.
So I had to call so many people.
Maybe I'll get a mini Christmas tree.
Yeah,
it won't be the right picture, but
that way you can picture where your tree will go.
Yeah,
so that's what I did. Every time I buy a house, I always picture where's the Christmas tree going to go.
Well, you do think of that because I have a split level house right now. And I don't have room for my tree on my first floor, so it goes in the basement, and that's fine. That's where the chimney is and stuff, and my kids love it.
Yeah,
but I don't love basements, and so I and nobody can see it because it's out the back.
Yeah,
we don't have neighbors really in the back, and so you do think of that later on.
See, that's why you need to carry a Christmas tree.
All right, I'll get one in the back of my trunk.
Add to it.
Yeah. There was a question that I thought of, and it literally just pregnancy brain went out of my head.
Because if you're renting, you're paying 100% interest
on someone else's mortgage.
Exactly.
Man, what was my question?
You're paying a mortgage, just is whose?
Just not your own. Oh, do you have any first-time homebuyer seminars that you guys do?
We don't have an official one, but I do have some agents who have reached out to me and asked me to do some with them. So I do have some in the future.
Okay.
And I'd love to schedule with you after your baby. Yep.
Just bring the baby.
Yeah, bring the baby. Everybody can bring their babies. But yeah, I think
we get a baby meetup, first time homebuyer course.
Yeah, absolutely. Because, there are a ton of grants out there. With the first-time home buyer, with a conventional loan, you only have to have 3% down. But here in Tennessee, we have THDA, where you can get a $6,000 grant or even up to, 10% of your sales price to go towards your closing cost and your down payment.
That's specifically for first-time home buyers, right? The THDA credit, yeah.
And it's in Tennessee. So I've had somebody move to Georgia want to do a THD.
No, sorry.
It's for Tennessee housing. But yeah, so there's THD and, there's USDA. These are all income-driven programs, but a lot of those first-time home buyers will fall into that. There's also different grants we're talking about, depending on where the house is, where you can get in with just 1% down. Of course, if you're a veteran, you can go up to 100%. But many people get gift funds. One cool thing if you're a first-time home buyer, especially if you're about to get married and you want to buy a house shortly afterwards, is CMG, and this is a full CMG thing. We have something called a Home Fund It account. And my son used this after he got married. Oh. And what it is kind of like, it's a crowdsourcing to where people can just donate money to your housing fund.
Anybody?
Huh. So, and what CMG does is we match and double it up to $2,000. So it's like $2,000 in free free money. And so I know when my son got married, they had a Venmo link to where, because a lot of young people don't even worry about getting a gift. They just Venmo or Cash App a gift.
So it can be in any form. Can they give cash? Can somebody give cash for that? Can they give
it's a
check?
Link.
It has to be a link.
It's a link. So it's just like if I Venmo'd you, So it's a link where they put the pledge in. It can be $25, $50.
Sure.
We have some people.
For your mortgage.
Yeah, we can't say that word. That's why I haven't said it.
Okay.
No, you can't because you don't work for CMG. So that's why I say crowdsourcing. But right, exactly. And so they'll put the link on their registry. Help us raise money for our first home. We have some people.
So cute.
Yeah, we have some buyers who've set it up for their high schoolers after they turn 18 and just let that money
Time to get married.
Time to get married. But you don't have to be married. Anybody can do it. No.
Okay.
You just have to do it before because there's a first-time home buyer class you have to take with the Home Fund It, and that has to be done before you're under contract. So you can't go under contract and then do it. So it's money that you're raising before you find a house.
Got it. Okay.
Or you have to take the class at least before you're under contract. And so, and if for some reason you win the lottery or your rich uncle dies, you end up not needing it, then you get all the donations back.
Cool.
You don't get the $2,000 that CMG matched, but the money doesn't just go away.
Yeah.
And so it's just a cool way to, have some extra money for your down payment and, some gift funds that get matched in double.
It's very unique. It's cute. Well, yeah, I think that's all I have. Do you have any questions for me?
Anything you want me to ask you?
No. It's all about you. I can. No, it's all about you. Ding. Anything else you want to mention? Say? Family, mortgage industry.
We have
single mom life.
Single mom life. Not for the weak of heart.
I could not do it. I'm very impressed because I could not
thank
do
you.
It's
like a whole old saying I heard once. People ask you, how do you do it? And it's, I had no choice.
Right.
So, but it's amazing the strength a woman can have when she
absolutely
has,
when you have to,
when she has no choice.
Yeah.
And now that my kids are older, it definitely helps out. My oldest son works for me. He's my loan officer assistant. And so I always joke, he's married, and I joke around and say that he's officially off my payroll, but he's the one who's literally on my payroll. And I would say, the mortgage business isn't really not that scary. It's kind of like, it just starts with the application. Some people are nervous because they know they might have had some credit hiccups, or they don't know if their income is enough. But you really don't know until you try. And that's one thing I try to do too. If anybody does apply and they can't get approved right now, I try to give them the steps to get where they can be approved.
Okay.
Because one thing we have seen is that credit scores have gone up. I think especially millennials are very worried about their credit scores.
Interesting.
And so they've been a lot higher. So we have reports. I think my average, last time I checked, the average credit score of my applications, they were in the 700s.
Wow.
And with the FHA loan, the standard's at least a 580.
Yeah.
You can technically go down to a 500, but you have to put more money down and stuff. But, so anytime a loan officer sees anything in the sevens, we're like, yay. But if they have had some hiccups along the way, there are some different programs out there. But, really try to guide them. Do A, B, C, and D, and then you can buy a house in 3 months or 6 months or a year. It's all about having a roadmap. And I've had people who are my age or in their 40s who never thought they could buy. Mm-hmm. And then we tell them what to do, or we see it's like, no, you can buy.
Yeah.
Because you've been on your job forever. You have money in the bank, and it's really cool to get to the closing table with people like that who never thought they could be homeowners.
Yeah.
And so I try to get people to put their guard down, because right away they're thinking, oh gosh, kind of like you don't want to go to the doctor. Not everybody wants to get their credit pulled.
Right.
But it's really not that bad, and it's definitely worth it if you end up buying a house.
Thank you for joining us on the Working Moms Podcast. I wish you a tantrum-free day.